sustainable financing and how we are incorporating ESG principles into helping the world transition into a more sustainable place. We have a lot of ground to cover, and I want to start with the regulatory environment. The world we're in today, the regulatory world we're in today, is shifting drastically, whether you're in Europe under the CSRD, under the Trump administration, the ISSB in Asia. You sit at a very unique vantage point from your bank to be able to see how all of these different regulatory changes are impacting your issuers and your clients. Could you talk to me a little bit about sort of what you see as the most impactful changes that are happening right now?
Thank you very much, Olivia, and thank you to Bloomberg and National Bank generally for inviting me to speak. I think the role of regulation is really about focus on transparency. So one of the big challenges is that we don't have a global regulatory environment. We've got the NGFS, the net greening of the financial system, where central banks are coming together and they're having a dialogue that at least helps to try and coordinate certain aspects and how to think about transition and sectors and the kinds of financing that we want to see. But in terms of the individual bond markets, they're really focusing on their own ideas about transition. And it generally works well when things are moving in the same direction. But when you have a big partner that's pulling back a little, there are other bits that are worried about whether or not they're paying too high a price for the degree of transparency and the push that they're having. So there's some concern about that, and we're certainly seeing some potential rollback in Europe on trying to ensure that the cost for corporates and others in focusing on sustainability is not so high that it's creating an uncompetitive environment in Europe, whilst trying simultaneously to ensure that we still have the momentum and push in the same direction. And they have a challenge because they're saying, well, perhaps you could disclose less. And there's a question about who should disclose less. Is it corporates with, 1,000 employees or 800 or something less than that or something more than that? But there are also a lot of funds and investors who have their own clients who are demanding that they understand what is being financed, that it moves in line with their own goals, not just the goals of things like the Paris Agreement, but broader sustainability goals. And so there is a sort of tension between the information that they need and want and that which the certain corporates are going to be able to produce or issuers are able to produce. And sometimes the data is quite difficult to get. So there's also a concern about using proxies or other things. And quite often the types of reporting are so specific, they don't tell you very much about whether things are moving in the right direction or not. They tell you a bit about where you are at time zero. Mm-hmm. So
who do you think's the leader right now? Like, who is the world looking to when it comes to ESG and climate regulatory disclosure?
Well, I think Europe is still very much ahead because it started its EU taxonomy. It's a very difficult taxonomy to follow. So there are a lot of assets that are very important to finance for the transition, which aren't necessarily going to be covered by the taxonomy. They haven't dealt with all the different areas of investment that we need to see. And they have quite a lot of sectors, but it may work for certain countries within the EU, but the EU has global companies with global projects, it has global investors who have global portfolios, and issuers who raise money in many jurisdictions. And that's one of the challenges of having very contained sectoral views and geographic views that are too narrow, that don't try and take account of all the different geographies in which projects are being financed and where investors are.
And in the past, we've spoken about this myth of carbon footprinting. Can you tell us what exactly you mean by that when you talk about carbon footprinting from a disclosure perspective?
Well, I think that the issue for me with carbon footprinting, and it's a bit about what I was saying, what it tells you about is where you are now. It's what would be called an externality. So if you take the carbon footprint of your current portfolio, it doesn't tell you whether you're going to be in line with the goals of the Paris Agreement or not. It only tells you where you are right now. And actually what's important is about where you're going, not necessarily where you are now. So one of the great difficulties is there are lots of challenges in actually coming out with a quantification of a carbon footprint. For certain industries, it's easier than for others. In bank portfolios, it's incredibly complex with all the different kinds of clients that they have. I should imagine for the provincial issuers, it's likewise. It's very challenging when you're dealing with many different sectors. For the energy sector, it's perhaps a little easier to come out with a carbon footprint metric. But given that the whole point is to say, if I undertake this project, this is what I expect to be the positive outcome for the environment. This is how I'm moving in the right direction. It doesn't tell you about that.
Got it.
It only tells you where your starting point is. And one of the greatest difficulties is when you have investors that are focused on their portfolios and they say, well, I'm going to reduce the carbon footprint of my portfolio progressively year on year. One of the best ways of doing that is not investing in the most impactful things they can. So what we really need to see is a crowding in of all the hard to abate projects, all the high emission projects that we need to transition. So, manufacturing of cement and steel and the energy sector generally, agribusiness, all the things that we really need to be moving in the right direction because they're not even close to near zero or net zero right now. And we absolutely won't achieve the goals of the Paris Agreement without it. So if you need those to happen, we need investors to invest in them. And the minute they do invest in them, that carbon footprint, i.e. where they are at time zero when they've invested, goes up, not down. So if we focus unduly and a lot of the regulatory reporting start saying, please report on carbon footprint, all you do is dissuade them from investing in the most impactful things that they probably can be doing at this point. So yes, you can invest in a new renewable project, and that's great. But we need so much more than that. That won't help the totality of the economic transition that we need to see.
Luckily, we have a lot of smart people, including many in this room, who are up to taking on that task. But yes, it is extremely complex and it's going to take a lot of resources. You were talking about investors, and I want to switch over to the issuer, especially since at Bloomberg, we love talking about bonds and financial instruments here. Can you talk a little bit about who your issuers are and what type of financial instruments you offer to them in order to help their sustainable transition?
So, well, we're the issuer. That's my role as head of funding of EBRD. So we issue, but we also encourage others to issue bonds. So EBRD's clients can get loans from EBRD, but we can also encourage them to access the capital markets. And the one really positive thing about the use of proceeds market, the green bond and social bond market, is that many investors who want to achieve significant impact like the transparency of the disclosure and will take credits that they wouldn't take on a standalone basis. So it's not enough to have sort of general notion of where the issuer is. They want to know the issuer is on a journey and the money is going to projects that they can assess and understand and determine are important for transparency. So a lot of investment funds which shy away generally from things like sub-investment grade will in fact buy green bonds that are sub-investment grade. And when people talk about greeniums,
does that still exist?
It certainly does for those types of investors. because what it's really about is supply and demand. So the demand for use of proceeds bonds is much higher than the supply. And the demand for the bond of a just investment grade or sub-investment grade issuer is going to be far smaller than it is for one of their use of proceeds bonds. And so that's what gives the greenium. For multilateral development banks such as EBRD with AAA ratings, we're very fortunate that we've got a broad investor base for any bonds that we issue. So yes, it's true that there are some very specific pockets that will potentially buy you through the level. Actually, it doesn't increase the universe that much of your investor base. It's pretty similar. It's just that some have very specific pockets that they're trying to fill. And so it never really existed in a meaningful form, I would say, for AAA issuers. Whereas for the just investment grade or sub-investment grade, it can be very meaningful.
That makes a lot of sense. And can you tell the audience exactly sort of what type of entities are your issuers? Are your investors? I know you work with banks in Canada. Could you give us some insight onto that?
Yes, I think all the banks in Canada have been very focused on integration of ESG, as well as supporting the green bond market. It was funny, yesterday we were listening, I think several of us in the room, to somebody giving a speech saying that they thought that ESG was not for investors, it was for governments. And I was amused by that, just trying to think, well, you know, if your project is consumed by fire or extremes of temperature or drought or various different things, clearly there's a sort of economic impact that's being measured. And I think that is well understood. In North America generally, I mean, there's a lot of tendency to assume that the US is not on that path. There are still substantial pockets of money that are focused on it. So investors are a mixture of insurance companies, pension funds, asset managers, but also the banks are significant. There are some central banks that have pockets that are specific to that. But we definitely see plenty of dedicated funds that are focused on use of proceeds bonds, but ESG integration more generally.
And in terms of, you know, the work that you do in your issuance and sort of the countries that you're looking to help, can you talk a little bit about biodiversity and sort of how you work with, you know, more developing nations in Europe and other continents to sort of achieve that?
Yes, it's been far more of a focus recently, trying to think about not just climate mitigation and adaptation, although that can also come into biodiversity as well. So thinking about stresses and how to have nature-based solutions. So in some of our geographies, you see substantial water shortages, which again speaks to climate adaptation, but also flooding that happens. So looking at rivers and planting of trees in certain areas, correcting river courses, having floodplains. Those are the kinds of things that we focus on in some of our projects to end up with nature-based solutions to very specific problems, which may or may not relate to climate particularly.
Got it. We have time for one more question, I believe, and a tiny pivot, but I want to talk about defense and how defense spending, particularly in Europe, but all over the globe, has been rising. And with that has been an increasing component of defense money being earmarked for climate emergencies and disaster relief. Can you talk a little bit about how defense spending and sustainability can coexist with one another?
Well, I don't think that defense spending, that ESG considerations are antithetical to defense spending. On the other hand, I mean, EBRD is not focusing on defense at this point. And I think that the sustainable finance market is focused a lot on transparency, and the kind of transparency that isn't really going to be very aligned with defense investments. So, you know, trying to report on how many tanks you're investing in or what kind of machinery may be less likely to hit the kind of use of proceeds bond market. But I think you also have to be very mindful of where the investments are going and who the end users are and what form, because defense and offense use the same kind of instrumentation.
Absolutely. So. Well, we're out of time. We could talk for many, many more hours about this, but thank you so much, Isabelle, for your time.
Thank you very much. Thank you, everybody.